All right, well, welcome to the Nino and Tierney podcast. We are excited to have another guest join us for our weekly conversation. So today we have Steve Ho, who is a tax attorney with a law degree from USC. He has managed research credit studies for many Fortune 500 companies in various industries, representing hundreds of millions of dollars in tax credits and refunds. He says his primary responsibility is helping clients claim and defend federal and state tax credits. He has over 22 years conducting these research credits, and he has extensive experience with IRS, state audits, appeals, with an audit acceptance rate of 98.5%. So I think 98.5%, if I could have done that in school, I would have done a lot better in my classes. So anyways, congratulations on that.
Well, thank you.
So welcome, Steve.
Thank you. Thank you for having me.
No problem. So I think, before we get started, this is Super Bowl week. And so, of course, I have to know, who are you picking for the Super Bowl?
I can't pick against Tom Brady.
Okay.
Go Bucks.
All right. So are you not a fan necessarily of Tom Brady, but, just, this is a logical pick?
I'm a Rams fan, and he's beaten the Rams twice in the Super Bowl. So, yeah, I've learned my lesson.
Okay. Well, as a Seahawks fan, I've learned my lesson too. And frankly, I think this is his 10th Super Bowl, so that's probably a wise pick. Now, I was going to follow my next question with, what are you doing for the Super Bowl? But I kind of figured you're probably like the rest of us of just staying home. And if you weren't staying home, you probably don't want to broadcast that all over the internet anyway.
Well, actually, I'm going skiing on Super Bowl Sunday.
Oh, you are? Where are you going to go?
Big Bear.
Okay.
We have a reservation, and so I'm taking my daughter to go skiing.
Oh, that's fun. This is we had a guy on the podcast 2 weeks ago, and he's a big skier. Went up to Park City, or likes to go up to Park City and ski up in that area.
Yeah, it's really nice at Park City.
Yeah, for sure. All right, well, so let's talk a little bit about Welsh Advisors and some of the things that you can offer to taxpayers and businesses. So how long has Welsh Advisors been in business?
We've been in business since 2014, so that would be 7 years.
Okay, and what made you guys decide to kind of go out on your own, or how did that happen?
We started, Welsh Advisors because, we got tired of traveling. So up until that point, my client bases were Fortune 1000 companies, a lot in Texas, a lot in the Midwest and the East Coast. And actually, I don't think I even had a California-based client at that time. So it was a lot of travel, and we wanted to change that. So we started Welsh Advisors to do more, local businesses.
And what do you guys specialize in then?
We specialize in the research credit. So, it's both a federal and California credit for companies doing, R&D.
Okay. And maybe kind of just give us the nuts and bolts of how that works.
Sure. So, despite the name, the research credit, it is for doing R&D, but it's also for doing design, engineering, a lot of technical problem solving. And so, so the IRS, allows companies to, track all their, all the costs that they incur to, do these qualifying activities. And once you account for the cost, then you get a federal credit that's roughly worth about 7.9% of your cost, and a California credit that's worth another 7.3% of your their qualifying costs.
Okay. And so, what do clients have to do to qualify for that credit?
There's two things. The first is they have to qualify the project. First, we have to so we have to determine whether a project qualifies for the credit or not. And then once a project is deemed qualified for the credit, then there's rules around what costs would be considered qualifying costs. So it's mainly costs incurred during the development of a new product, a new project, a new process, new technology, all the way up into the point where they're deemed to have eliminated the uncertainty in the project.
And so they get a federal credit, you said, of 7%?
7.9%.
Okay. Okay. And so do they have to actually have the project approved by IRS before it qualifies?
No, it's it's self-determined. They have to they have to determine whether the project qualifies or not, and they don't have to submit it to the IRS.
And that's where the audit comes into play, right? When they
and so that's exactly.
Okay. And so what kind of, I know we've talked about it before, but it sounds like, documentation is kind of key for some of these projects. Is that true?
Yeah. So there's two phases of documentation. One, to document that the project qualifies, and then two, that the cost collection methodology is a valid one.
Okay. Okay. And so maybe just kind of give us an idea of like who would be a good candidate for you guys, because I know so tell me a little bit how you help them through this process and who's a good candidate for that.
So actually, pretty much all companies that do any design, engineering, or technical problem solving. Traditionally, it's a lot of manufacturers who take this credit, but in recent years, it's been expanded to include a lot of architects, engineer, software companies. Basically anyone who hires technical people with technical backgrounds.
Okay. Okay. And so they reach out to you, and then you guys, how do you help them through the process then?
So the first thing we do is help them identify, figure out how to identify, qualifying projects, and then help them determine, what documentation is needed. And most of the time, these companies, already have the requisite documentation. We just want to make sure that they understand what the IRS requires, and so they keep, it. And then on the cost collection side, we work with their accounting system to track the costs. And sometimes they don't have the system in place, and we help them set up this the system. And most of the time, it's not setting up a whole entirely new system. It's mainly tweaking what they already have to identify the qualifying costs.
Okay. And then I guess, so say somebody kind of missed the boat the first time they filed their tax return already. How far back can they go, or is that possible to go back and amend and claim the credit?
Yeah, you can always go back to amend and claim the credit. On the federal side is 3 years. On the state side is, California side is 4 years. Although, I have to add one caveat that, the IRS normally doesn't view the credit as an audit issue if it's, on a timely filed tax returns. But on amended returns to claim, you specifically claim the credit, a lot of auditors do take issues with that.
Okay. Okay. All right. Well, that's great information. And so if we have clients that are people that listen to this, the 5 people that listen to this, have questions, then I'm assuming they can just reach out to you or Jess.
Yes. Anytime.
Okay. What else have you guys been working on? I know recently, it sounds like you've got some good stuff going.
Yeah. So with the whole with the CARES Act, Congress created the employee retention credit. And at first, most people didn't take the credit because you either have the option of taking the credit or getting a PPP loan. Well, in late December, Congress changed that, and they say, well, even if you got a PPP loan, you can now go take the credit and retroactively take the credit. And then very recently, the IRS finally issued guidance on how to retroactively take the employee retention credit. So we've been very busy with that.
Okay. And so on that one, so you said that before you if you had a PPP, you couldn't do the credit. You still can't use the same wages for both, though. Is that correct?
That's correct. And so one of the tricky things is trying to figure out what wages was used for the PPP, and then you take the excess wages and you apply that against the you use that for the credit.
Okay. And so a person to qualify for the credit, what is the qualifying standard for that then?
So there's two ways to qualify for the credit. One is pretty straightforward, and that's if they've had revenue drop of 50% or more in any quarter, comparing from 2020 to 2021. Now that criteria changes from 50 to 20% for starting in 2021. And so that criteria is pretty straightforward. And the other criteria isn't so straightforward. It's if it's for companies who've been shut down wholly or partially during this time. And and unfortunately, the Q&A that the IRS issued isn't very helpful in determining what constitutes completely shut down or partially shut down.
Okay. So if you could, so you said, I'm sorry, I'm going to go back. 50% a drop in wages, or excuse me, drop in revenue. That's for 2020, but for 2021, it's just a 25%. And you compare quarter to quarter, right? A 2020 quarter to a 2021 quarter, or 2019 to 2020, depending upon the situation.
Mm-hmm. Yeah, that's correct. Okay.
And then, so the partially shut, so it's either that's one qualifying, or you have, partially shut down, but if you could work from home, like your business could work from home, then you still qualify as considered partially shut down?
No, actually, the IRS addressed that. So if you work from home and you don't have any disruption in your business, then that's not really being shut down.
Okay.
It's more of an issue if, sometimes, you do work from home, but if, there's issues with that, then, you can still, then you potentially could qualify for it.
Okay. And how do they claim those credits then?
So the IRS is actually funny with this. So on January 22nd, they said, which is a week before the deadline to submit the Q4 941.
Right.
Said, well, you can submit it all on the the Q4 941. So basically, they gave businesses 1 week's notice.
Okay.
To do that.
All that notice? That seems like that's a long time lately for the notice for them.
Yeah. But they say, well, if you can't get it on the Q4, for all the credit you would have qualified for the year, then you have to go back and amend the Q2, the Q3, and the Q3 941s, which is the quarterly federal payroll tax return. It's
so interesting. I'm wondering if they're going to come up with a shortcut solution to those. Do you think? I mean, I don't know if you've heard anything, because going back and amending those, like amending payroll tax returns is like impossible almost, it feels like.
Yeah, it's a pain, but fortunately we have a lot of experience with it, because we've been dealing with the payroll tax credit for the R&D credit. Okay. So the R&D credit allows startup companies in the first 5 years with revenue, or pre-revenue and plus the first 5 year revenue to elect to take the federal credit against the federal payroll tax. So we've helped companies in the past take that credit and then apply against their federal payroll tax, and that did involve a lot of amending the 941. So you guys are
941 proficient then, it sounds like.
Yes. Mm-hmm.
Okay. All right. Good. And then because it seems like with the deferral, like payroll tax deferrals, they're going to have to amend for that as well. And then with these credits, it feels like we're going to be amending 941 like over and over again for like the next 2 years or something.
That is a possibility. Actually, that's highly probable.
And it seems like they should come up with a way to file a form that kind of almost like says, this is what I filed on the 941. This is the new credit that I qualify for. and this is the amount that you need to give me, basically.
That was what I initially anticipated.
Yeah.
Because the last time the IRS had retroactively change in the law like this, they created a special form that that you can go back and pick up all the things that you could have picked up,
right,
and then follow on just one form.
Okay.
But nothing has happened on that front yet.
Okay. Well, they're too busy, at least Congress passed another stimulus bills, and IRS is fully understaffed for sure. So, yeah, probably isn't. I'm not going to hold my breath, basically.
Well, I'm thinking at some point, it's like maybe once all the stimulus bills have been passed and everything, I mean, that could be an issue, is that, the IRS think, well, if we create this form right now, we're not sure what Congress is going to do in a couple of months, and then we'll have to start all over again.
Well, and I think the urgency isn't there at the moment.
Mm-hmm.
I think that when all those, let's just say this, in December, when all the payroll tax deposits that have been deferred are due, I bet that they'll get some movement. In the same way that PPP deductibility wasn't really a full-on issue until the end of December. It's like, hey, wait, we need deductions for this. So they obviously amended and passed something. So that's my guess, is that it'll be November, December before anything really happens.
Actually, yeah, I think that's really good reasoning. So
yeah, reasoning maybe. So we'll see.
Mm-hmm. Yeah.
Well, thank you again for taking a little bit of time and talking to us. Is there anything else that you wanted to mention, I guess, that I might have missed related to the credits or either one?
Oh, yeah. We talked about the ERC, the Employee Retention Credit, and the shutdown. So most people who are taking this are, just following the 50%, looking at the 50% drop in revenue. But the shutdown, so we looked at the landscape, and so there are certain industries where, it was no-brainer that, well, at least here in California, that, the governor just basically shut down. All the medical practices were considered non-essential. All the restaurants and bars that were closed down. So those, if you have clients in those, industry, that's actually, we think that's a no-brainer that, that provision applied to them.
Okay, good, great. Well, thanks again for joining us, spending a little bit of time. Good luck in the skiing. Is it skiing or snowboarding this weekend?
We're skiers. We don't snowboard.
Okay. All right. Well, that's good. I'm a skier too, just because I tried snowboarding once, and then I just said, you know what? Why am I doing this? I like to ski. Like, I don't fall down too often, and so I'm just gonna. An effective ski day or a great ski day is one that I don't get hurt. I'm like, okay, everything's intact. So.
I totally agree with that.
Okay. Well, it's good. You'll have a great time with your daughter, I'm sure. So thanks again. Have a good day.
All right. Thanks for having me.